So great to have you on the podcast. How are you today?
I'm doing well. How are you?
I'm doing well. I'm excited for this conversation. This is about to make my day right now. So let's do this.
Let's do it.
So this is the first time you're being introduced to our audience. Some probably have already heard of you. Some I'm hoping are hearing about you for the first time. I don't know about you, but those are my favorite people to reach, the ones that are just getting to know you. And I'd love to start off by just telling us a little bit about your background and then tie that into the founding story of PensionBee.
Very happy to. PensionBee started off more than 10 years ago. I had worked in financial services and I knew the retirement landscape from a high level strategic perspective. I'd been in investment banking, so I knew the key players and I knew a lot of the retirement reforms that would be coming through. And so when I left my job in the UK, I had to move my retirement account because I didn't want to leave it with a former employer. And I think so many people find themselves in this situation. You're switching jobs. I mean, the average person has 11 or 12 different jobs, depending on which country you're looking at. And they leave their retirement accounts behind. And I didn't want to do that. I wanted to take it with me and to have control over it. And so I tried to call around all of the older, more established companies that I knew from my finance days. And basically, nobody wanted to have me as a customer. They all wanted me to get a financial advisor, which I did not need. No financial advisor wanted to take me on because the account wasn't big enough. And finally, I made my way over to one of the stocks and shares supermarkets, as we call them. And they bombarded me with all of this paperwork to fill in. I had to go to the post office, which I hadn't done in years. And I had to pick between thousands of different investment options. And the process felt so antiquated. And I knew there had to be a better way. And, that was back in 2014 when financial technology was just becoming really popular. And people, everyday consumers, were putting their trust in new financial technology products. And retirement felt really underserved. If you looked around the landscape, there were no retirement companies trying to do things for consumers. And so that experience of just moving my retirement account and how difficult it was inspired me to create PensionBee as a financial technology company. And we help people just look after their retirement accounts. We help them to consolidate old retirement accounts, to contribute and grow those accounts, and then eventually to take distributions and withdraw and spend that retirement money as your salary in your later years.
So you and I chatted about this a little bit before the recording, but one of the things I really wanted us to focus in on here is specifically in the US, just a lack of retirement preparedness. This is something I'm sure you see a lot of. Can you explain maybe why that is and how you see kind of pension be playing a role and hopefully helping with that?
Absolutely. Retirement preparedness is really quite difficult in the US because the system is not set up to make it easy. I can compare and contrast a little bit with the systems in Europe, for example, where a concept like automatic enrollment, which means basically for every job you get a retirement account automatically. You don't have to do anything. Those kinds of systems make it really easy for people to save for and prepare for retirement. In the US, some states, some companies have varying degrees of automatic enrollment. But when you look at the stats, what you'll find is that even if you have access to a retirement plan at work, a lot of people just don't take up the offer. They basically leave what is oftentimes considered free money on the table because your employer is usually willing to pay something into your retirement account. It's called a match. And a lot of people just don't take it up because they don't realize that this is going to be their salary for the future. So the system is a little bit complicated. People end up leaving free money on the table. And of course, as you switch jobs regularly, you can find yourself either having no retirement account, having left your old retirement account behind. and just generally not being in control of this really, really important area of your personal finances.
Now, a lot of times you'll hear people say like, "Well, my home is my retirement." Can we talk about that? Why that's I mean, I'm sure someone could find a way for it to be a right statement, but why that statement is often wrong.
Yes, your home is not your pension. Your home is, generally speaking, the place where you live. And homes and retirement savings are both important. But your retirement account is really what's going to pay your salary when you stop working. And I think if you think about it like that, it becomes kind of obvious that your home doesn't pay a salary, your home doesn't pay your bills, and there's a lot of, I think, risk in just relying on one single asset, a house or an apartment, to fund an entire salary for all those years where you won't be working. And I often find that home ownership comes with a lot of unintended consequences. There are a lot of costs, unexpected costs often that need to be covered. And let's face it, it's not really a diversified portfolio. House prices can go up and down, and if you find yourself in a bad housing market, relying on that house as a salary can be really quite damaging. And so I think that houses and retirement accounts should be thought of as two very important goals. And everyone should be aspiring to have both because you'll need both.
So how do we instill that wisdom into people at a younger age? Because, you know, especially when it comes to pensions, right? The earlier, the better. So, like, how do we continue to, or I guess, what advice would you have to educate people on being more prepared early?
Absolutely. I think the financial education is sorely lacking in every national curriculum. It's not just a US problem. We see that a lot in other countries too. A lot of the curriculum and what you learn in school has very little to do with the skills that you'll actually need in real life. And so it falls on other players within the market to provide some of that financial education. And there are a lot of really amazing individuals, particularly on social media, who are doing a fantastic job of giving people the basics of what they need to know about what can seem like a pretty complex topic, retirement. We've recently created a series called Retirement 101. And in a couple of minutes, over just 5 or 6 episodes, you can learn all the basics and all you need to know about retirement so that you can feel confident and empowered. And financial education is really what leads to that confidence, that empowerment, and that ability to then take action and do something about your retirement. You know, at PensionBee, we're all about taking action and being in control because if you if you want to have a happy retirement, it really is up to you. It's up to you to make sure that your old retirement accounts are in a good place. It's up to you to contribute and take advantage of your tax allowances. And it's up to you to do that for yourself. I think especially as time goes on and Social Security comes under challenge, the responsibility really is yours. And financial education can give you that empowerment, that confidence to do something about it.
I want to talk a little bit about, Pension B's U.S. expansion, what really excites you about that, and then also any market observations you've had as compared to the UK.
Absolutely. The US expansion has been one of the most transformational and exciting things that we've done for PensionBee. PensionBee is particularly focused on everyday savers. And when we looked at the US market, what we found was really quite a lot in terms of financial services, but no company that's really focused on everyday savers with that holistic retirement approach. And the service that we offer, which is to essentially consolidate old retirement accounts into a new online IRA, really felt like a service that has been sorely missing from this market. When we looked under the hood of some of the 401k plans that are in the US, we found that around 30% of all 401ks are dormant. That means they've been left behind in previous jobs, and people don't necessarily have that visibility and that control over them. And it makes sense, right? You switch jobs, you get busy with life, and sometimes that retirement account can be the last thing you think about. But it is really important for the future. And so we help people to bring those accounts together to invest them in a appropriate way for retirement. We offer target date portfolios that help you to save regardless of your age and where you're at in your journey towards retiring. And of course, we help you to contribute because most people, when they realize how much they've saved so far, also realize that eventually they're going to have some kind of a shortfall and they should be making use of their tax allowances every year. And so that is the core foundation of the service that we offer. We're very focused on everyday savers, people who may not kind of see themselves as the customers of some of the traditional financial services companies. And we believe the service is exceptionally valuable. And, on your point around differences between the US and the UK, other than coverage, where I think automatic enrollment in the US could really help people save more, one of the other really kind of crazy things that we found is the level of fees and the level of hidden fees that exist in a lot of the retirement accounts that we've seen. One quirk of the system that doesn't exist anywhere else is something called a safe harbor automatic rollover. I don't know if you've come across this before, but it's a really strange concept where if you have left your employer and you have less than $7,000 in the account, your employer is allowed to automatically move that money without your consent into a safe harbor IRA. And a lot of people are quite surprised by this because, you know, why does this happen? There's a lot of benefits for the employer. They get a more streamlined retirement plan, they reduce their legal risks. But from a consumer perspective, you can find yourself in some very high charging accounts that you didn't even agree to. So that's definitely one of the quirks that we have come across in this space. And we came across it surely from customers who eventually realized that they were in these safe harbor accounts wanting to roll over to PensionBee.
Interesting. I'd say the majority of people don't know about that, right? Would you agree with that? That you can roll it
Absolutely.
over?
Absolutely. People are so surprised. A lot of people get busy with life and they don't necessarily see the mail coming. They don't always open the letters. And a couple of years later, imagine logging into your account where you thought your old 401k is, and you discover it just says zero. It's not there. And that actually happened to one of our customers, and it's how we realized that this is such a common practice amongst employers. And of course, the average tenure in a job is what, 2 to 3 years these days? So the likelihood of you having a 401k worth less than $7,000 is pretty high.
Interesting. What's next, Romy, for PensionBee?
Well, lots of growth we expect. In the United Kingdom, which is our original market, we continue to grow really, really quickly. We have a really high brand awareness. Around 60% of people have heard of PensionBee, and we continue to capitalize on that and really help people to overcome some of that inertia and some of that complexity around retirement planning. And in the US, it's really quite a similar story. There are millions of Americans who just haven't taken control of that retirement. And we are very focused on helping them, and particularly people who may not have an IRA yet. We're particularly focused on helping them prepare for and enjoy that happy retirement too.
I love it. Well, Romy, I look forward to continuing the conversation in the future, and please keep us up to date on any big announcements. Really love what you're building, what you've continued to build, and best of luck on the continued U.S. expansion and with everything.
Thank you so much.